Hey guys, Joseph Arendsen here, gonna break down October stats and then look forward into November to see if this hot real estate market is gonna continue to go. Here we go. So the big question is this hot market gonna continue? We are, just throwing this out there, but we are seeing a little bit of a slowdown, but that comes with the times that we're in, and that's the election, right? A lot of people have definitely pumped the brakes a little bit, slowed down, and want to see what's going to unfold. So the team and I spent some time, did some research, and we looked back at the last 4 elections to see what really unfolded in the real estate market during either a transition of parties or keeping with the same party. And over those last 4 elections, there wasn't a big change. Sure, we saw a little bit of a slowdown and everybody kind of pumped the brakes like this, but right after election, we saw things kick back up. So we're still in a hot market and we predict that we're gonna see that going forward. So what is happening outside of the election? What really is happening in our market? Well, the biggest stat and the biggest thing that we feel is a mass exit from urban city into the suburbs. Now, the stats aren't necessarily showing this yet, but us realtors and the team, we definitely feel this. And we're seeing a little bit of a slowdown in condo sales, but definitely a huge uptick in single family residences. So we're seeing that exit start to happen. So the appreciation on the single family side has definitely went up. Actually, we're up about 12% compared to the condo appreciation, which are at about 7 to 8% year over year. So how is that stat going to affect like the overall market? Well, San Diego, as I've said, is 99% built out, right? So the building that we are doing, a lot of it is urban infill. So tear down, rebuild, add more units on what was a single family residence, tear that down to build tall, right? And we're seeing that in the urban city, in the downtown area, happen all the time. But with this exit happening, how is that going to affect our market? And I think we're going to see it in 2 ways. One, the slowdown and maybe even some opportunities and some deals in the urban city with, unfortunately, a really high uptick in single family demand. And that's going to drive appreciation out on the single family side. So what do you want to do as a consumer? Well, first off, if you're okay living in the urban city or in the inner city, take advantage of that, right? Get active right now. See what's out there, start planning the neighborhood that you want to get into, because I do think there's going to be some opportunities soon. So to piggyback on the competitive market that we're in, I just want to break down some stats for everybody. So this month alone, we came into this month with 43% less inventory than this time last year. Well, sure enough, in the month of October, we've had 2,089 listings come on, which is relatively low. We like to see those numbers in the 3,000, 3,500 range. So we had low inventory come on the market, and we had even more go off. We had actually 3,360 properties go off the market. So what are my predictions? All right. First and foremost, homes will remain in high demand. We just don't have inventory, and we're seeing a lot of folks refinance right now into extremely low rates, 2.75, 2.5, 2.25 even, I've heard. So with that happening, I don't see those folks who are getting these low rates moving anytime soon. So our low inventory with no room to build, and especially with the suburbs not being built out right now, we're still going to see this really high demand continue. So I think the appreciation that we've been seeing is most likely going to continue in the short term and maybe even all through next year. The big thing that can slow the whole market down, and when we're actually going to see something adjust in our market, is when interest rates go back up. So the Fed has already come out and they said that they're planning on keeping interest rates low for the immediate future and then into next year. Now, we don't know if that's the first quarter, second quarter, when they're going to do any adjusting. So the big thing is we got to keep our eyes on interest rates. Once interest rates do go back up, I think that is the time that things will finally slow down, and maybe we'll be able to gradually build up some inventory and get back in an even healthy market. But that is what I got for you guys this week. Please feel free to reach out to myself or anybody on the team. We'd love to answer you guys' questions. Feel free to reach out. Take care.